Hello and welcome to our weekly update here at OPC. And well, we're in a broad sense, the financial markets are still recovering from or reverberating post the Fed meeting last week. The Federal Reserve signalling slightly hawkish slant that it's prepared to raise interest rates to tame inflation. That was the sort of the key takeaway from the Fed. Policymakers suggesting that they indicate 2 rate hikes through to the end of 2023, previously having not expected any until 2024, at least the majority of policymakers. But overall, I don't think the Fed has really been too surprising. There's been 3 months since the last dot plot, and there's been some very hot inflation readings, there's been some strong economic data, but the path ahead looks less clear. Markets have sold off a touch, but bonds have also been bid, and interest rates bond yields have fallen along with stocks. So that's an interesting development post a more hawkish Fed than it was previously, and indicates maybe that it won't be able to raise rates much, and there could be a slowdown coming ahead. So the reflation trade is not just taking a bit of a breather, it seems to be in reverse at the moment, and we have seen some flight to some of the more quality areas of the market, some of the more resilient areas. In terms of the energy markets, well, oil prices started the week higher. They've been rising for the last 4 weeks on an expected strong demand over the summer travel season and the reopening of global economies. Also, we've had a pause in the Iran talks, so that country, of course, can potentially unleash about 1 million barrels per day onto the market from its reserves, but the talks around the nuclear deal are on pause following elections in Iran, maybe offering some short-term help to the market as well. Now looking ahead, we've got OPEC coming up, and their technical committee told members that they don't need to worry about US shale coming on stream this year. Potentially will come on stream in a big way next year. We do also need to consider the Biden administration's views on drilling, but overall OPEC doesn't expect a big hit from shale this year, and so that allows it more control over the market, and we'll look to see whether or not they're going to use this meeting to signal how they plan to increase or maintain production post-July. The current deal, the current agreement that's in place lasts through to the end of July, so we need to see what OPEC is thinking. They, apart from not worrying about shale production coming on stream until next year, need to assess whether new variants and so on will lead to a slower reopening of the economy, or the global economy, than they maybe had previously thought. We have seen, of course, worries about that in the UK with the Delta variant and the postponing of the easing of all restrictions in England, and elsewhere there are still worries. So lots to look out for in the week ahead, plus the usual inventory data from the EIA. Big draw last week. We'll look to see if that's followed through again this week. That's it from me for now.